Are you ready for the hot seat?
Welcome to In the Hot Seat with the Tenney Group. I'm Spencer Tenney. It's good to be with you. What's the difference between a family office and a wealth advisory firm? Well, my next guest is going to help us unpack that. A special guest, in fact, our sponsor over the upcoming Legacy Summit. Please welcome John Lueken, president of Arlington Family Offices, Nashville. John, welcome to the Hot Seat.
Spencer, great to be here. Thanks for having me. Looking forward to this.
Well, I thank you for your trust and joining us in this upcoming event. For those that are not familiar with you or your firm, why don't you take 30 seconds and just kind of give us a high-level overview?
Sure. So Arlington Family Offices, we are what's known as an MFO or a multifamily office. So family office has become a big buzzword in the industry, right? It spans RIAs and independent financial advisors and wirehouses and brokerage firms and private banks. Arlington only serves families, right? It has been custom built brick by brick over the past 28 years in service of families. And so it has kind of three different branches. It has robust investment services, which would be, kind of building a diversified family office investment portfolio. It has all your financial services, which would be bookkeeping and bill pay and payroll and setting up little operating LLCs. Has a full tax team that only serves Arlington families. It has kind of the third buckets. You have investment, financial. Third would be legacy services. So we own our own trust company, only serve as trustee or co-trustee for Arlington families. We do a lot of sophisticated trust and estate planning. So setting up all the acronyms, SLATs and CRATs and GRATs and CRUTs and all the different things that go into a sophisticated estate planning structure. And we also do a lot on philanthropy. So we do a lot of work with private foundations and donor advised funds on behalf of our families. And as silly as it sounds, it could be hard to get money away well. How do you maximize that tool for the benefit of your family long term? And the last piece is a curriculum we'll get into a little bit later, but it's build a better family. So raising good stewards of wealth, passing on your family's legacy, values, and principles from one generation to the next. So it really is a full service family office. We work with about 80 different families for about $16 billion in assets, based in the South. Primarily our families in the Southeast, but also Texas, Florida, Michigan, out West. It was really a national presence.
Well, wonderful. I appreciate the overview. So when we kind of jump in right there on the investment side, coming into a new year, as we're filming this right after State of the Union with Trump, and so there's a host of different things. How do you see the markets right now, and how is that influencing how you're advising some of your families?
Yeah, you can kind of take this question a couple of different ways, right? One would be sound financial advice doesn't change that often, and so maybe you don't have to shift around too much. The other way is nobody rings a bell when the rules of the game change, and they've changed quite a bit. In my career, it seems somewhat counterintuitive, but the market can really only focus on one major variable at a time, and that major variable over the past couple of years has been the investment in artificial intelligence. So the market's kind of myopically focused on one variable while there's a bunch of red flags or problems or at least concerns bubbling up in other areas. So you've kind of had this rolling recession in different sectors. We had some challenges in real estate. We have kind of a ballooning federal deficit and debt. You have a ton of hotspots around the globe from a geopolitical standpoint. And so the market is really focused on one area, but there's kind of other things that are going on. The reality is, what do you do when the world gets a little bit crazy? It's like, how do you ask yourself the question, or how do you answer the question when thinking rationally is eccentric? Like you're probably onto something. So what do you do when the world gets a little bit crazy? And it's usually lean in, right? Stick to your knitting, right? Own durable assets, unsustainable assets, focus on things that you can control. And just try to digest where you are and don't go chasing returns that you don't need. So maximizing, so many people think about the potential return and they don't think about the risk taken for that potential return. So stay focused on risk-adjusted return and own quality assets.
I love that. Don't chase returns you don't need. If you don't get anything else out of this interview, I hope you heard that loud and clear. So one of the things that I really appreciate, and I think our audience will appreciate, of the 80 plus families that you guys serve, There's certainly more than a handful of folks that kind of have a history in the transportation and logistics space. And I want to tie that into to the families. Like what, following liquidity events, which is kind of like this is where our worlds collide. Liquidity events. What are some of the most surprising things that families are faced with once they, you know, on paper, like everything's great, but what are some of the surprising things that maybe they don't anticipate following a very successful liquidity event?
Yeah, the quiet, right? Things get a lot quieter than what they're used to. There's a really good white paper out of Yale Management. I think it was probably published 5 or 6 years ago, and it's Life After an Exit. And it goes through some of these questions. So much of your identity is in the business that you have built or steward. And, once you sell that business, that changes a lot, right? Your activity, what you're required to do on a daily basis changes quite a bit. And that quiet can be hard, when your identity is so tied to an asset and kind of the crowning achievement of what you've built so far is the sale of this asset. Well, what comes next? And so like some of the quotes from this white paper like kind of pulled ahead of this were, my greatest professional achievement in my life is behind me. I'll never repeat what I just did. I felt like I hit a wall. You go from 100 miles an hour to zero. The silence is deafening. It was hard to return to my family and reintegrate. Feel alone and socially isolated. I don't see nearly as many people as I used to. And the list goes on, and that's not true of everybody. But there is a rhythm, right? There is some pattern recognition in some of this. And so it's dealing with the quiet and figuring out where are you going to put your energy and talents to their best use in the next chapter.
Yeah. I love this. And, I think there's so much overlap in our two organizations is this, this value around family. And, specifically you guys talk about building great families. And clearly if it was just down to economics, they wouldn't have a need for you because it would already be done. They'd already have their money. So can you unpack, what does that mean to build great families in the context of, serving families?
Yeah. So our founder, right, very purpose-driven, intentional individual, but you see it time and time again where people save their best thinking for their business. Okay. And they put their energy and their efforts and their best ideas into building this great business. Well, what happens if you save some of your best thinking for your family and you pour energy and effort and intentionality into your family? What does that look like? Because the reality, like you heard a lot of people on their deathbed, they don't regret the time they spent with their family. They might have regret, working every Saturday for the past 50 years. So like, how do you shift that paradigm and get your priorities right on the front end? The other thing is you've had this liquidity event. It's like a meteor came into your world, right? And it has rocked everything. And whether your kids want it or not, they are likely going to be stewards of these assets in the future. And how do you raise good stewards of those assets, right? How do you pass on the values and principles of the family from one generation to the next? A lot of that is intentionality, good communication, quality time. It's everybody's like, oh, I want quality time with so-and-so. Well, quality time, truly quantity time. And then there's those moments when you are together that the student arrives, right? And you have a chance to teach them and lean in and share the stories of the past and pull forward those values and implement them. So it really is it's an intentional path that we take families through on this Build a Better Family curriculum. It also, like, wealth brings complexity, just always does. And we can get to that on the investment side. We can get that on the planning side. We can get that on the amount of assets that families own. And you have to be really intentional about pushing back complexity and getting back to simplicity. And what does that look like? And so Build a Better Family also speaks to some of the planning that you do and making sure that, the planning could be really sophisticated and complicated and the lawyers are high-fiving each other on what they were able to structure, but your beneficiaries can't live within that plan, right? How do you capture your spirit and your intentionality and, write a legacy letter to the beneficiaries as these trusts who really know the purpose behind it and are empowered by those resources to go out and make their mark in the world. So, there's a lot in that answer that we can unpack more, but that's what Build a Better Family is about.
Yeah, I want you to save some of that gold for the Legacy Summit. I I am curious because you're serving a lot of families. What do you notice about founders who've had these liquidity events? What are they worried about most, like from a generational legacy standpoint? What is their greatest fear?
Um, Honestly, like so often, and again, it does vary, and you've seen a lot of this too. But a lot are worried about messing up their kids. A lot are worried about not being good stewards of the wealth after. A lot are worried about, okay, this crowning achievement is in the past. What do I do next? How am I going to spend my time? Um, and it's really hard. So one of the interesting things about the post-exit life is people are constantly asking the question, how do I find my purpose? I need to find my purpose. What's my next purpose? And we'd argue probably asking the wrong question. What you need to do is you need to identify your talents. When you identify your talents, you find meaning. When you give your talents away, you find purpose. And so that can take all sorts of different shapes, right? If you're a great business builder, you're probably really good at relationships. You're probably a good teacher, right? You had to train your staff and pull them forward. Probably have a good strategic and analytical mind, right? And there are gifts you can take and apply in different places that help you find that purpose. And same for your kids. Help your kids identify those talents, foster and nurture those talents, and then help them find avenues to give those talents away. And they're going to have meaningful, fulfilled lives. You're worried about having spendthrift kids or, kids who don't have, the drive to go out and make their own marks. They don't have to because they're beneficiaries of these assets. That's a great way to tackle it. Through that communication, investing in them, helping them identify their talents and, inspiring them to go out there and use those to make their community and world a better place.
I love that. I think there's a lot of business owners probably watching this, and maybe they have a wealth advisor, and maybe a very, very good one. And some don't still understand, like, what would be the characteristics that, would, or what would be the circumstances under which a family office would make more sense than a family, like, than just say, I don't want to say just a wealth advisor, but like an elite wealth advisor. What would be the difference? Why would that be a better fit for someone to have a family office over a wealth advisory firm?
Yeah, so it's a great question. 99% of wealth advisors out there are trying to create a fortune for their clients. Right, we're in this 1% where our families have created a fortune, and we're trying to preserve and prudently compound that fortune. And it doesn't mean that we take less risk, but it goes back to the original comment. We don't take unnecessary risks, right? We're not chasing high outside fastballs, right? But this is a pitch down the middle that we're going to hit hard, might get caught at the warning track, right? The probability of success goes up. And as you built a business, right, if you can stack the probability of success consistently in your favor over time, you're going to have really, really good outcomes. So some is a philosophy, right? The risks worth taking. And that's different when you're creating a fortune versus managing a generational fortune. The other would be, the quintessence of luxury is giving people back time, right? Money is really just tokenized time. And how do you give people back time? And so some of the services that a traditional RIA provide, right, they don't provide some of the services that a multifamily office would, which would be kind of the bookkeeping and bill pay and accounting and integrated tax, very proactive on the tax side, some of the sophisticated planning in trust services and so on. So there could be a resource moment that makes sense for families as well. There's also kind of a broader investment landscape. A lot of advisors are really focused on stocks and bonds. The investment world has changed quite a bit over the past 20 years. Private markets have grown tremendously. Having that right partner, if you're going to start investing in private markets, makes a really big difference. The last thing I'd say, and I think one of the questions we spitballed is, what are questions you should ask a potential financial advisor or multifamily office? And there's plenty of things around fees and services and so on. What is the relationship that matters the most? Honestly, like, I've made the joke before, for the length of the average private investment is longer than the average marriage in the United States. As sad as that is, right?
Wow.
And you're talking about making a decision, hopefully for your family, that is going to span multiple generations, right? You and I both know all of business is problem solving. right? All you solve problems better than your competitors, you get further ahead. That becomes your competitive advantage, right? It is easier to solve problems, whether they are investment challenges, family dynamic challenges, an untimely death, a nasty divorce, planning complications, so on, and so on, and so on. If you have a strong relationship, it's easier to solve problems with people that you know and trust. And so that would be the biggest piece. Are we like-minded? Are we valued aligned? Are we trying to get better every day? Or are we being intentional about where we are going and what we are building in the future? That's going to increase that probability of success for you and your family over time.
I think that's a good word right there. But even like in the, the family office universe, there's some things about the way that your team at Arlington Family Offices is kind of approaching this that there's a little bit different. Can you unpack that a little bit so that there's our audience can appreciate that as well?
Yeah. So there's a couple of different things. One, we own our own trust company, and we only serve as trustee or co-trustee for Arlington families if they want us to in that slot. There's a very big difference as a trust beneficiary being told that you can or cannot have a distribution from the trust if it comes from somebody your family has worked with for generations, right, and understands the spirit and nature of that trust versus somebody in an ivory tower in Chicago saying no or yes. So kind of there drives a massive behavioral advantage because there's an increased understanding and service of that family for a long period of time. There's also kind of on the investment side, right? You have a bunch of capital, you can invest in anything, right? You can do anything. Like you put it all in the stock market, you got little pieces of paper, right? You own these proportional ownership interests in businesses. We are big believers that design reveals destiny over time. And how do you get the design right to not unnecessarily interrupt that eighth wonder of the world, which is compound interest, right? And also to not, if the design is correct, right, you're never going to end up being a forced seller of an asset, right? You're not going to have to sell an asset because a fund life is ending, right? How do you get the structure correct in order to allow true long-term investing, right? The IRR on patience is outrageous, right? Nobody thinks about it that way. Warren Buffett was worth a few $1 billion in his 60s. He's worth $200 billion in his 90s, right? How do you think about creating structures that allow for the long-term compounding of capital? So on the investment side, also, what do you want to own, right? How do you, again, stack that probability of success? So we have, different investment structures that we get into or another time or offline, but that really focus on, right, maximizing that probability. So whether that is direct real estate, whether that is long-term partnerships with like-minded, the lower middle market private equity, or it's things we do in structured finance or asset-backed loans, or, all of it is not just looking at the upside, it's protecting the downside, and it's within a structure that maximizes that long-term compounding of wealth. So maybe that answers some of your question. Was that?
Yeah, no, I just kind of want to hear that because I do think that hopefully our audience, ideally you want to be, this is not a decision you make in terms of like having a trusted partner. You want to do some of your own diligence around like who's the right fit for me. And there's a lot of great resources. So I just wanted them to hear those differentiators a little bit just to help understand that those are real things. Let me transition to Legacy Summit. I'm super excited. Let's just start about, obviously you're going to be our presenting sponsor for 2026. You were a sponsor in 2025. What did you take away from our inaugural event in 2025? And what was your take on that?
Honestly, I didn't quite know what to expect. And Galen, who helps you, plan this amazing summit, does such a good job, right? And she's so thoughtful. I was blown away. I thought you guys did a really outstanding job, right? You picked a venue that increased the chance of having thoughtful conversations. It's good to feel small in nature. So you're surrounded by a beautiful landscape and a beautiful structure that allows people to disconnect and slow down and be intentional. I was super impressed with people's willingness to communicate and share and be transparent and their challenges and what they're going through and their hopes for the future and things that have been different than they expected. And, we talked about you can't really teach anybody anything until the student arrives. It was a lot of people attending that summit And the kudos to you and your team kind of working with some great families that share a lot of the values that you hold dear, but they came with open minds and open hearts and shared and wanted to learn. And honestly, like I was on a panel discussion last year, but I learned so much more from the audience than, I think I gave to them. So it was really a collaborative environment and blew me away by the quality of the folks there.
So 2026. Again, thank you for expanding your role in our Legacy Summit. I'm super excited for you and your team and what you're going to be doing there. So why is it that you guys have chosen to do that? I mean, I'm grateful for it, but why is it important to your firm, and where's the value for you? Where's the value for our clients?
For us, we want to work with really great people and really great families. So you make the joke, the best thing you can do for your competitors is to hire poorly, right? And you hire the wrong individual, and then they hire the wrong individual, and next thing you know, you got a bozo brigade. But the other thing is you can onboard, right, the wrong clients. And we've seen the movie before of different types of families that value different things, and we know how it ends. And the best long-term partnerships, right, are ones with aligned vision and values. And so I have found, the Tenney Group, the way that you think about, serving the clients that you serve is very much aligned with how we serve our families. And so that was a great natural partnership. And it makes sense to, build relationships with some of these families that have stewarded or created this family business in the past and are now entering this next phase. And, maybe we can be a potential resource, but it really is relationship driven. And it's a wonderful sandbox to meet great intentional people. And that's what our business is all about. So really excited to be a part of it and be included.
Well, likewise. What do you hope for some of these families that, that this will be their first time participating in a Tenney Group Legacy Summit? What is your hope for them as they on the other side of the event?
Community, right? That they find a community. There's, it sounds kind of dumb, but wealth can be isolating, right? And some of the challenges, like nobody gave you a manuscript of how to deal with some of the concerns and challenges you face post liquidity. And so finding a community, you're not alone, right? There's a bunch of people going through similar things or tackling similar challenges or have similar goals. And it's a great community for the sharing of best ideas. You don't have to solve every problem on your own, right? I unapologetically steal a good idea from anybody, give them full credit, but use it and bring it forward and create value. And so I hope community, some new resources, some new perspectives. And if they're going in with anxiety or concern, some of that is alleviated because there's strength in numbers. But I think you guys build a really great community at this event. And I think a lot of them continue to stay in contact and have real relationships. If they didn't know each other before, they stay in contact and build relationships after. And so that's my hope for the attendees.
I love that. Well, I got one more question, and then we'll do a final kind of wild card question for you, John. So for those clients, let's say they're 1 or 2 years away from a liquidity event, what would be your number one advice that you'd give to that family?
Yeah. Well, that the obvious one would be on the planning side, right? There's some low-hanging fruit of planning that makes the most sense kind of as you're heading into that liquidity event to, start building a relationship with somebody who is going to be a trusted resource for your family for a long time. And there's some simple planning that if it hasn't been done, it's low-hanging fruit ahead of those types of events. The other is, really spend time thinking about why. Why do you want to do it? And, it's kind of, sometimes it could be the dog that catches the car. But I think the more time you spend on the why and what you want, who and what group to be the right steward of that asset going forward and what you want your life to look like after, right, that event, the less of the shell shock you go through. The other thing, and this can happen long before a sale. And, maybe it's a bit of what makes America great, but it is also a bit of an Achilles heel is people they identify themselves so closely with what they do. And people are so much more than just their job or just the business they built. And so, spend time focusing on some of those other areas in advance of that, so it's less of a shock after you sell your asset. And when I spend time on, have some hobbies, right? Pour into your family. Identify yourself as a brother or a sister or a mom or a dad or or an uncle or a friend or whatever it is. And as you kind of reshift energy and focus into some of those areas, you actually get better in your primary one, but your bucket fills and you will not have, some of the core challenges that come after an exit when you're so wrapped up, right, in just one part of your life. Because if your life is a canvas, there's a bunch of awesome things going on, and just become increasingly aware of all of those elements in advance will serve you really well after the event.
I love it. Pearls of wisdom. All right, final wild card question. 2030 Winter Olympics. Somehow you have created the athletic ability to participate in that, John. I want to know, what would be the one event that you would want to compete in the most in the 2030 Olympics?
2030 Winter Olympics. Oh man, I love skiing. I grew up skiing. I try to ski at least a couple of times every year. And there's all sorts of different takes on skiing, but if you could win the traditional downhill, I'd have to dig deep and find courage. I joke, go at life with a little bit of courage. I'm going to have to get a little bit more courageous, but being, the king of the biggest ski event and winning the downhill would be pretty special.
Well, I like that. Well, that's a great note to end on. I appreciate all of our clients that are being courageous. Sometimes planning and preparation, that is an act of courage. Hey, John, thanks so much for sharing with our audience, for sponsoring Legacy Summit, for the friendship. That's going to do it for us here in the hot seat, sir. We will see you next time.